Today, Risk Intelligence published their report for the second quarter of 2022. And with me here today on link to talk a little bit about the report, I have its CEO, Hans Tino Hansen. Welcome back.
Thank you very much. Good to be with you today.
It's good to have you back. We'll head straight into the report. For this quarter, you reported a revenue of 3 million Danish crowns, increasing 7% from last year's second quarter. ARR, annual recurring revenue, saw more aggressive growth, however, 16.9 million by the end of the quarter, and thereby an increase of 32%. Churn rate has decreased slightly from Q1, 3.4%, and net retention rate has increased to 111%. Tell us, Hans, how would you summarize the quarter?
Yeah, the quarter has seen a quite significant increase in our core business. So that's the Risk Intelligence System and the other recurring products that constitute 86% of our revenue. It has seen a decrease on advisory services, which is more a question, just like what I mentioned in Q1, about a periodization of where we have the large consulting projects. The net retention rate of 112% signifies that with the same clients that we had in the quarter last year, we have actually sold 12% more, and that is after the churn has been deducted. So that's a pretty good kind of result. We've had an overall growth in the whole revenue of 7%, which is probably on the lower end, but mainly due to the decrease in advisory services.
And what has led to this decrease in advisory services?
That has mainly been the periodization, because we have one or two big projects per year, and last year they were mainly in Q1 and in Q2. Meaning that if we didn't have them this year, we'll have them later this year, most likely, then it's basically moving between quarters. Also, already Q2 is the lowest quarter revenue-wise that we have historically. You can also see that in the report, where we have some new graphs that actually display this, while Q3 is higher and Q4 is much higher, because that's where we have the annual licenses renewal that are based on the calendar year. In that way, it's kind of a mix of decrease in advisory service and increase in our core business.
Then we'll look forward to seeing that in Q3 and Q4. You write in the report that as the pandemic is nearing its end this year, your operating expenses are returning to normal levels. Compared to last year's second quarter, costs have increased. What is the driving factor?
The driving pattern is it's kind of twofold, because one is returning to normal business again, with costs that are on a higher level than last year. That is mainly wages. It's things like rent and other operating costs that were not the same last year, because everything was on a low level. People were working from home. That's one part. And then we've also spent quite a significant more on sales and marketing and lead generation this year compared to last year in the same quarter.
And you described that it's nearing its end, we're not at its end. And I'm curious to know then, what are normal levels, and if you think that there's still room for costs to increase to that level?
Yeah, I mean, we see the pandemic and the impact as such as ended. However, we also believe that we will have COVID at the end of the year, October, November, December, but most likely it will be more like a normal flu impact on people, hopefully. So that means that we are actually back at normal levels, and we don't see any further increases on our operating costs. We are going to spend more on sales and marketing and lead generation, but otherwise we are starting to be on a more flat curve when it comes to cost levels going forward, also into 2023.
And as we move forward in the report, then we can read about the highlights. During the quarter, there wasn't a lot. It was Land Logistics and an agreement signed with ESOA. And we talked about that a little bit in our previous interview, but there was a lot of activity following the quarter. There's 3 new deals that have been signed, 2 of which of these are fleets. I thought we could start there and with the first deal that has been signed, a major cruise operator, you call it. Tell us, what does this new deal mean for Risk Intelligence?
Yeah, it's an addition to, we have a few cruise clients, and this is it's one of the bigger cruise lines, and it means that we are slowly moving into that market. We will look more into it and see how much we can develop that market as well. In terms of ships, it's not a big addition to the more than 8,000 ships that are operated by our clients. We do not count the cruise ships into the commercial world fleet because that's more tankers, bulk carriers, container vessels, and so on. But it is a growing small market for us.
And as you're heading into that market, I'm curious to know how the need for your services differ between your more traditional customers and the cruise lines.
Yes, the most significant one is in our port risk, so the port side of things, because their terminals are not the same as the terminals for the tankers and the bulk operators and so on. So they use different terminals. We do have some, for instance, in Piraeus, we have the cruise terminal on, but otherwise that's the main difference. The threat areas are more or less the same. They need more emphasis on the Caribbean and the Northern Med, so the Northern Mediterranean and the Adriatic, than the tanker operators or the container operators for that matter. So there is a slight change, and we are looking at a challenge between the two, and we're looking into that.
So we can look forward to potentially seeing more cruise lines being added to your clients following the quarter.
Hopefully, that's certainly a possibility.
Following the last quarter's efforts in Ukraine that I enjoyed reading about, you managed to secure what you described to be a high-profile Athens-based ship owner. Tell us more about how this deal came into fruition following your efforts in Ukrainian ports.
Yeah, we started... we have been working some years ago with the same group. It's a group owning several ship-owning companies. And then we assisted them in with some ships that they had with cruise on in Ukrainian ports back in March, and we coordinated the effort, and the actual evacuation was carried out by a British response company. And they also had access to our system for the duration of the time, and then they signed on for a license for the whole period.
Tell us more. How has the interest for your product increased following these efforts in Ukraine? Can we continue to expect more agreements to be signed?
I would say that some, yes, probably mainly within insurance. We have a weekly report that we started publishing in March called the Northern Black Sea report that looks into the ports in Romania, Ukraine, and Russia, and also the sea area, Black Sea. And that one has attracted some interest, quite some interest from those who are operating there or are waiting to be operating again when it's possible. As you may know, there has been opened for this JCC humanitarian grain initiative, and but the number of vessels involved in that is quite small. So the bigger operators, and which are mainly our clients, are kind of waiting to see. And in that respect, we are also monitoring the situation daily. We also had one of our port, we had our port security team in Romania doing surveys the previous week, where they also went to the river up Danube towards the Ukrainian side. So we are also in the area and updating things for our clients, because there will be an uptake both in the grain initiative, but also when the ports will be reopened at some time for normal commercial traffic.
And you mentioned insurance there, and that happens to be the third client that you have signed following the quarter, Lloyd's Underwriting Syndicate, and that is the insurance spectrum. Could you talk to us more about this client and your role in the insurance industry?
Yes, we already have a number of war risk insurers P&I and whole club insurers already in various countries, mainly in the UK, because that's where much of but also in Norway and in Singapore. But this is the first Lloyd's syndicate that we have signed up, and we have attracted more interest following this client was landed and was published with the press release. It means that we have a number of inways into the insurance industry, and we also work with the insurance industry and some law firms, basically mainly in London, on arbitration reports on issues related to insurance and conflicts.
And then finally, my final question here. You exit the quarter here with unchanged forecasts as well as secured short-term financing. Tell us, what can we look forward to as we enter now into the second half of the year?
Yeah, Q3 is looking quite good already. Q3, that's we are halfway into Q3, but it's looking pretty good. We also believe that Q4 will be good, and since 65% of our revenue historically is based in second half of the year, it means that that's also where we have the vast kind of basis of our revenue, and with growth, that's also where we can deliver more growth compared to the more meager or actually a very marginal decrease that we had in the first half of the year. So most of our revenue is based in Q3 and Q4, and we are quite positive on the outlook for the second half of the year.
Hans Tino Hansen, that was all my questions, but I thank you very much for your time and wish both you and Risk Intelligence continued luck in the future.
Thank you, and it was good to be here today.